Okay, let's unpack this. Today, we're diving into Bajaj Finance Limited, a real giant in India's financial world.
Absolutely dominant.
We've got quite a stack of sources here, articles, research, their own reports. And our mission really is to cut through the noise,
Yep.
give you the key insights, help you understand what makes this company tick. Might find some surprising stuff.
Oh, definitely. What's really amazing about Bajaj Finance is, well, the sheer scale and the growth. It's huge.
Yep.
India's largest NBFC non-banking financial company.
Right.
Over 100 million customers. Think about that. 101.8 million to be exact.
Wow.
And their AUM, assets under management, over 4.16 lakh crore. That's what, around $50 billion US? Massive.
And the growth numbers are just
Incredible, right? Over the last decade, you're looking at median sales growth of like 30.9%.
30%.
And profit growth at almost 26% CAGR year after year.
And it's not just, old school lending either. They've really jumped on the tech bandwagon.
They really have.
This super app ecosystem they've built, it pulls together a load of financial services.
Makes it seamless.
Allows customers to manage loans, payments, everything, and use that EMI card.
The equated monthly installment card, yeah.
Across, over 150,000 stores? About embedding themselves,
Deep into the customer's digital life. It's smart. But here's a question that kept coming up for me. How does a lending business growing that fast keep its books so clean?
The asset quality question.
Exactly. Because, surprisingly, Bajaj Finance reported their best ever NPAs, net and gross non-performing assets,
Read for it.
at 0.0% in FY 2024.
0.0. Seriously.
0.0, which is, well, it's almost unbelievable in lending. It points to incredibly tight risk management.
Or something else, it seems. Almost too good to be true sometimes.
It suggests, maybe a really effective data-driven approach or just exceptional skill in balancing that crazy growth with strict credit control. Very rare.
Okay, so brilliant operations, stellar asset quality, but then we hit this paradox with the valuation.
The valuation.
The stock trades at a definite premium. Its price-to-earnings ratio, 35.49 times. That's significantly higher than many peers.
Definitely paying for growth there.
But here's where it gets interesting. We applied Benjamin Graham's value investing principles, factoring in a pretty conservative long-term growth rate, let's say 15% a year, way below their history.
Okay, so a value lens.
Right. The calculated intrinsic value came out around 131.8.
And the current price is about 948.
Roughly, yeah.
So by Graham's method, it's actually looking fairly valued, maybe even a bit undervalued.
Exactly. It highlights this tension, doesn't it?
It really does. The market sees a high-growth rocket ship, but a conservative value framework says, maybe the price is reasonable if you temper those growth expectations.
Challenges the idea. It has to be seen only as a premium growth stock.
Totally. Now, beyond numbers, there's always the regulatory side. Big companies operate under scrutiny.
Especially in finance. So what's the recent story there? It's a dynamic space.
Well, yeah. The RBI, India's central bank, did impose restrictions late 2023.
Yes, the digital lending products thing.
Right. Because they weren't issuing key fact statements.
Yeah.
Those documents spelling out all the terms. Crucial for borrowers.
Transparency, basically.
Exactly. But credit where it's due, Bajaj addressed it, and the restrictions were lifted pretty fast by May 2024.
Okay, so responsive, but not the end of the story.
Apparently not. More recently, April 2025, the RBI sent a letter of displeasure.
Ooh, that doesn't sound good.
No, it was about data security and controls in their co-branded credit card business. So it suggests, there are still ongoing compliance hurdles.
Even while they're being responsive, it's that constant balancing act, isn't it? Innovation versus regulation.
Always. On a more positive regulatory note, though, they secured $400 million from the International Finance Corporation.
Oh, what for?
To expand climate finance in India.
Right.
So strategic diversification, maybe moving into greener areas.
Interesting. Okay, so wrapping this up, Bajaj Finance. Clear market leader, incredible growth, amazing asset quality on paper,
Right.
but a premium valuation, and it seems recurring run-ins with the regulators needs constant watching.
Which brings us to the key question for you, the listener, the investor. Does that undeniable growth story, that operational strength, does it outweigh the high price tag and the need to keep a close eye on regulatory compliance?
Yeah. What really stands out for you after hearing all this? What's your takeaway on Bajaj Finance's future?